Hey, what's going on, guys? This is Terrence Ray, and we got another stock market update. I've been scanning, going over some stocks after hours, so I'm gonna show you what I got. I got some targets, some nice breakout candidates, and we're gonna go over those and talk about the market today. So basically, today, as you can see, I got a chart of the SPX, and the market for the most part, after this high move that we've had the past 2 3 weeks. So yesterday we got almost like a doji candle, and then today we got a little small candle. We trading in a range for the past 2 days, consolidating, going side to side. The I think the SPX actually ended up like $5. So basically a nothing burger, just consolidating. If we drop down to the 1 hour and look at the chart, you can see it just went sideways from about yesterday all the way through today. We got some consolidation. These dotted lines right here are the expected move for the week. So you can see we've traded right outside of the expected move. Now let's see what happens tomorrow. With tomorrow being Friday, um, I'm gonna go out on a limb and predict that maybe it pulls back a little bit. Maybe it'll come back down here and test this line right here, right around. We call it 44. What is that? 44.71. So we see if we. So I'm gonna go out on a limb and just guess that it maybe we'll get a pullback tomorrow, and it's probably some more consolidation and side to side action after this thrust move higher. Now I've been running through some stocks after hours, and one thing that I noticed. Let's go straight to the IWM. I'll take a look at that first, and on the IWM, you can see that it made lows back right around October 27th, just like the S&P 500. And you can see down here at the bottom, if we look at it, I'm gonna hide the drawings. We got almost like a harami. So you got this candlestick here, and then the body of this candlestick is inside of that body. So that's like a reversal candlestick pattern. And then you see the up move, got the green candle, then the gap up, and we got another gap and then a pull back into this area, and that's where I drew my Fibonacci retracements. Came down here, hit my little sweet level at the 61.8 on the retracement, and then at that point I started to project higher on my Fibonacci extensions. We already hit the 100 level. You can see that level held as resistance yesterday. Look at this long wick, right? So it hit that level right around 180.74, and then it wicked back. And then today, you can see the small caps ended the day down. So with that being said, the next level, now I'm not, is 161.8. That, I don't know if that might be a little bit of a stretch, but I did want to come on here and give some targets just in case. So let's just say you went for that target. The market closed at 175.88. That's about 14 bucks away, give or take about 50 cents. And then the low down here is 160. We'll call it 162 just to make it easy math. So that's almost a 1-to-1 ratio. If you went after, if you tried to get long here, put a, take profit up here and a stop loss down here. Now some people might say, hey man, that's a large stop loss. Um, that's a 1-to-1. That's if you trade in shares. Yeah, you could put your stop down here right around what 166, 167 at the low right here at the 618 retracement. And then at that point, you risking, I don't know, maybe you're risking what 50 cent to make a buck almost. So that's just I just noticed that, right? That's almost that right there from this low to this high equals this low to this high. So now at this point, if you can get this next target, that's good money, right? That's real good money. The next one I want to look at is we'll look at UBS. and then we'll end with Honeywell. UBS, same thing. I got a nice move up. Now I'll bring my indicators up just so I can show the divergence on the indicators. Down here at the bottom of my squeeze indicator, you can see the momentum. So the momentum, it was losing momentum going up. Price action came down. So that's your divergence. We'll draw that out with a trend line just to make it official. See that price action low, lower low. If we go down here to the momentum, come down here at the histogram, and you can see it was making low, it had higher lows instead of lower lows on price action. That signaled a turn in the market, pull back in between my sweet zone and gap up, boom. Already hit the first take profit level. Now, next take profit level is right here at the 100, which would be 26.14. And then the next take profit level is all the way up here at around $27.42. I would just take profit at 27. And 27 will be right here taking out the new highs. So I noticed that that's a nice setup, right there. If you just, I mean, it's a couple of ways. I'm not going to, tell people how to trade it. I'm just giving you the targets. You want to buy shares, you can buy shares. You can sell puts, buy call options, buy that's I probably would stay away from the call option because that's not a whole lot of movement. Looking at the option chain, you're not gonna get much selling options unless you did like a now I was gonna say a poor man's cover call, but I don't like the strikes. Probably the best play in this particular stock would be to just own the stock, just buy shares, maybe do a cover call, buy the share, buy 100 shares, and then maybe sell. You don't even get anything for selling the calls. So it's hard to just do a cover call unless you came over here, came out 64 days, bought 100 shares, sold this call. But you gotta, so option wise, not a lot to do in UBS. This is more of a straight up play, buying the shares, picking which one of these targets you want to hold to. Next one is Honeywell. Now with Honeywell, same thing as with IWM. You can see that the market was making lower lows. If you look at it, price action, low, 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 right? Now you come down here, look at the histogram. You can see the histogram was moving up. So it was signaling to us that momentum was slowing, as you can see. And then we got that turn in the market. And anytime you get that big thrust up, pull back. So you got that thrust up, you get the pull back of the rubber band, and then boom. And so that's what you get. Boom, boom. Right around here in the sweet zone. Took out the high. First target hit already. So the next target for Honeywell is right up here around 198.56. I probably would take profit at 198. This one, the options market is you got weeklies, so it's a little bit more juicier. I'll probably you can sell a put in here. You can collect a $1.40 selling this put outside of the expected move, or come a little closer, sell the 190. I wouldn't sell the 190. You need more strikes. Let's see if we can go out 36 days. Nope. Still $5 wide. 43 days. Nope. Still $5 wide. Excuse me. 64. So with this one, looks like your best play, if I was to do anything, is sell this put right here. Right at the 29 delta, right outside the expected move. Or you could buy a call spread, maybe something like that. Possibly selling the put might be the best play, or buying the shares outright. because you can't buy a 190. You can't buy a call at 198. You can buy this $2 call. You can buy this call right here at the 195 strike. And then once the 195 strike becomes in the money, if we get that in the next 29 days, you'll double your money on this option. But there's no guarantee. We could see some consolidation. So if I was going to buy a call, I'd probably come out 64 days and then buy the 195. That just gives me more time for it to get there. Because I expect to see a little sideways action, especially with you seeing this is the 200-day simple moving average. I'm almost willing to bet that sometime, maybe if it doesn't hit here tomorrow or maybe Monday or Tuesday of next week, this moving average may play as some type of resistance. So I don't know the time frame for hitting there. I just like to come on when I see the charts and I see my divergence and the break ahead, pull back, like to get those Fibonacci targets. So with that being said, guys, these are just my projections. Nothing's guaranteed. Make sure you own these trades, trade them at your own risk, and do your own due diligence. Look at the chart and see what you think about it. And then if you like the charts and you got something out of this video, hit that like button, give me a thumbs up, share the video, comment down in the comment section what you think. If you're bullish on these stocks or you're bearish, give me some stocks that you're actually looking to play or you're looking to trade at this moment as well. With that, guys, I'm going to be out. Peace.